Hello and welcome to your Washington, D.C. metro area real estate market report for April of 2025. I'm Edward Slavis with the Slavis Group of LPT Realty. A lot going on now with some market uncertainty, so let's kick this off as always with interest rates. Not much change in interest rates from last month. We are hovering right about 6.7% for the national average for a 30-year fixed. It was 7% at the beginning of the year, so we had some good progress there, and it's now flat. A lot of uncertainty in the bond market. We hope this number continues to fall. If it climbs, we'll be in a bit of a pickle as rates go higher. Now, this 30-year fixed of 6.7% is the national average. Our clients are seeing about 6.25 to 6.5 with our preferred lenders. If you are curious what you qualify for, let us know. Happy to make a no obligation introduction. Now, the uncertainty in the market, it is not all caused by Doge, but we're going to just call these the Doge predictions. A lot of people are fearful that there will be a market correction in DC. We're already seeing it in some markets. Phoenix, big correction. Austin, Texas, Tampa, Florida. Lots of markets have seen a correction. DC is actually quite resilient thus far, but people are making two predictions. Again, it's not all caused by Doge, but that's what we're calling them here. The first prediction is that prices are going to drop because there will be an increase in supply. Either people selling their homes because they lost their jobs, or people selling now fearful that the market will crash and they want to sell now before it does. So there's going to be an increase in supply. The second prediction is a drop in demand, that either potential buyers are losing their jobs and are no longer qualified, or they have job security and are qualified, but don't want to buy now because they fear the market will tank. They'd rather try and buy the dip or just wait until there's more certainty. The question is, are these true? And we're gonna look at these over the course of the next few minutes. So let's start off talking about new listings in DC. Now, this first chart is, all of these charts are the entire DC metro area, not just DC proper. This first chart is the new listings in the DC metro area. And you can see we had a nice big jump up here in March. A lot of new listings hitting the market. Year over year, you can see it's about 20% higher in March of 2025 than it was in March of 2024. Should that alarm us? Does that prove that first fear? I don't think so, for two reasons. One, in May of 2024, we had a 20% increase over May of 23. This is before we even had election results, much less before Doge. So a 20% increase in listings year over year doesn't mean much by itself. It's not unprecedented for sure. The second thing, though, is if you look, for 2 years, we had substantially fewer new listings, year over year, in part due to higher interest rates. So even if it's 20% higher, okay, it's 20% off a very weak month here, where there were far fewer listings in March of 24 than there were in March of 23, than there were in March of 22. So it's 20% higher than a very low benchmark. What about prices, though? Prices continue to increase. This chart's now broken out. Red being detached homes, blue all properties, yellow condos and co-ops, and all three of these continue to climb. Now, this is just for homes that have successfully sold. So if the home is listed and it's not in great condition or not marketed well or not negotiated well and doesn't sell, the price would not register. For the homes that successfully sell, the prices keep climbing higher and higher. Again, if you look at the year-over-year change, more or less everything that sold last year was 5 to 10% higher than the previous year, which is higher than the previous year. We had a few months here where things were a few percentage points lower. But overall, the median sale price year over year continues to climb. Same thing with price per square foot. All three of those lines are sloping upwards as they move to the right. And year over year, again, with the exception of a few months, the very beginning, end of 22, beginning of 23, when there's a few percentage points lower, overall, the price per square foot of homes that successfully sell keeps climbing. Now, what about closed sales? This is, I think, interesting data here. Number of closed sales, 22, it drops in 23. It had started to climb up a little bit at the end of 24, mid to late 24, and the beginning of 25. The last 2 months, it was flat. Year over year, it looks like this. So again, a lot fewer listings going on. And then above this line, it started to climb up. The last 2 months, there was no change year over year. We hope that increases because we've now seen a 20% increase in those new listings. We want to see a increase in the number of closed sales as well. So the fact that the closed sales will always happen as soon as maybe a month after it's listed. So this data is going to be very important for us to look at next month. We want to see a year-over-year increase. Otherwise, we've seen a surge in new homes being listed, but not a commensurate surge in buyers for those. Now, one of the ways we measure supply and demand is through months of supply. You'll see all of these headlines, they drive me bananas. They'll say 1,000 new homes are just listed in DC. That's meaningless data because we don't know how many buyers there are. If you have 1,000 new listings, if there are 10,000 buyers, you're still in a massive seller's market. If there are 100 buyers, you're in a depression. You need both sides of the equation. So months of supply is that ratio of supply and demand. A month of supply is simply if there are 10 homes on the market and 5 sell per month, you have 2 months of supply. Or if no new homes are listed, everything will be sold in 2 months, there'll be nothing available. The lower the months of supply, the better for sellers. The higher the months of supply, the better for buyers. Now, if you look at this chart for the last 3 years, you're thinking, wow, these things just keep climbing. Well, 2 things. One, the lower the number, the better for sellers. There's no hard and fast rule, but generally speaking, below 2 to 3 months of supply is a seller's market. Between 3 and 5 or 6 is a balanced market. Above 6 is a buyer's market. Again, the lower the better for sellers, the higher the better for buyers. So this looks like it continues to climb, but 2 things. One, for all homes, you're right at 2 months of supply, which is still a seller's market. For detached homes, you're about 1.75 months of supply, which is a seller's market. Even for condos, which is the highest, you're not yet at 3 months of supply. So that is a seller's market, potentially a balanced market for condos. Now, this is the last 3 years. If we go and look at the last 10 years broken down by quarter, this chart shows you months of supply. So yes, these numbers are climbing up for the last 3 years, and they are now back to the levels that they were in 2018, 2019. You call it Q4 2019, which if you were in the market at the time was a very good, strong market. Lots of inventory being listed, lots of inventory selling. That was a strong, pre-COVID market, but still a good, strong market. So it's a question of what we compare it to. Far more months of supply than in 2021 when the market was just on fire, but returned to a much more typical market with 2 months of supply, which again, it's high compared to red hot market, but compared to 2019, everyone thought we had a very good, strong real estate market in 2019. So there's no reason to be alarmed that the months of supply is back up at 2. Same thing if you look at closed sales, is a question of what you compare it to. This is the closed sales broken down by quarter for the last 10 years. And as you can see, you had spring quarters, which were these high points down to winter quarters, back up to spring. And that was the market flow. You had a big step down here, and now this is the level that we're at. There's a big step down for all condo properties. The green line is now, row home is just showing you that they're moving in sequence with condos there. So it follows this shape. And if you saw there was a big drop in closed sales, And as we go forward, we have to ask, are we going to compare it just to these last several years when rates were higher? Or do we also reference, the previous 7 years before that when rates were lower and there was, a lot more inventory? So we're going to keep our eye on this. Again, we want to see the number of closed sales, climb back up as quickly as possible, just showing the resilience of our market. So to revisit these two frequent Doge predictions, is there an increase in supply? Not really, or at least it's very hard to say. There's 20% more this month than year over year, but again, 20% increase is not unprecedented, and it's 20% higher than what was a very, very slow year. So that could just be a slight return to normal and not necessarily the Doge effect. Is there a decrease in demand? We won't really know. We see an increase in supply now. We need to wait until next month to really see if there is a decrease in demand. I will say we had another buyer consultation this morning with a referral from a client. Those buyers are ready to go and want to buy in the next few months. Fully qualified, motivated, ready to go. When I posed this question to our lender, this was back in February, in March, discussing February numbers. February, compared to the year over year February, excluding refinancing, almost equal in terms of the number of new loan applications. Okay, so that's a good leading indicator. We really want to keep our eye on this. So not to be anticlimactic, it is possible, but it is far too early to tell. We're going to have to go and see a few more months of data before we can really conclude anything. So what does this mean for sellers? Are more homes being listed? Yes, sort of. Again, we kind of talked through those numbers. Are home sales increasing? Prices are still going up. The number of home sales, no, it's not increasing. At best, it's flat. For sellers, you will still get the price you want as long as your home is prepared, priced, and marketed. So if you're thinking about selling, let us know. It is still a seller's market based on months of supply. That also depends on your neighborhood. I can show you two neighborhoods right next to each other. One has 1 month of supply. The adjacent neighborhood has 4, 5, 6 months of supply. That is not crazy. It is very much based upon your exact neighborhood and the type of home, whether it's a condo, row home, detached home, etc. If you have any questions, contact us. We're happy to offer a private consultation and home evaluation. For buyers, there are deals available. 3 years ago, or now 3 years and a month ago, we would have buyers come to us and say, we want a deal. And we'd say, this is the strongest seller's market we've ever seen. It's hard to get a deal. The deal you get will be with your interest rate because it's below 3% and you'll never see it that low again in your lifetime. That's the deal. Now it's the opposite. Now you're going to pay a higher rent. Again, our clients are seeing 6.25% to 6.5%. We had one buyer who was actually pre-approved at 6% with no points, which blew us away. But most, all really, except for him, are seeing 6.25% to 6.5%. There are deals available on price, though, especially if you're looking at markets where there's a higher than average supply, more months of supply than average. So there are deals available. You're going to pay a higher rate, but with our preferred lenders, you can refinance at no upfront cost for 3 years following. So as rates tick down to 6, hopefully to 5.5, closer to 5, then you can refinance at no upfront cost. If that interests you, contact us for a free consultation. Happy to walk you through the buying process, the market, how we can find you a great deal. So that is your real estate market report for April of 2025. Again, I'm Edward Slavis, the Slavis Group of LPT Realty. We would love to be a reference for you or anyone else you know in the DMV looking for real estate advice, whether it be buying, selling, property management, you name it. If you have a question, we would love to be a resource for you. Thank you for watching and have a great week.